Assalamualaikum. My name is SHARIFAH NATASHA SAFIYYAH BINTI MURTADHA. My ID number is 2025950603 and my group already chose LEONG International BERHAD versus SENG Capital BERHAD. Without further ado, I will continue about company's background. First of all is LEONG International BERHAD. So it is founded in 1978 and also in Kuala Lumpur Stock Exchange on 29 October 1990, and it has been main market of Bursa Securities on 16 May 2019. The operation is integrated poultry farming, feed mill, manufacturing, trading, and last one is food process and distribution. The products from LEONG International BERHAD such as Melindo Food, IMAI, Baker's Cottage, Sun Eagle, and Happy Egg. The board of directors is Tan Sri Datuk Lau Eng Guang, Tan Sri Lau Tuang Wang, and also Mr. Lau Chiang Guang. Next, on the 24th April 2012, both LEONG Holdings and MB First BERHAD were withdrawn from the main market of Bursa Securities Malaysia after being privatized by emerging Glory India BERHAD. After restructuring was completed, the Affinity Equity Partner Private Limited, International Sedang BERHAD on 9 September 2014, while the founding Lau family retained the outstanding 77%. LEONG International Sedang BERHAD was converted into a public company on 17 August 2018, officially becoming LEONG International BERHAD. Hence, it was listed on the main market on Bursa Securities on 16 May 2019. Like I said just now, in the earlier. Move on to the SENG Capital BERHAD. The vision of the company is enhance sustainability of business by focusing on cost effectiveness and develop corporate values that align with the historical milestone of SENG Capital BERHAD is firm layer by laying birds with the capacity of 120,000 in 1992, and also in 1995 it upgraded all layer farms to the CHS and introduced paper egg tray. It also launched the premium eggs brand called the Happy Egg. And lastly, it implemented AIAO farm system. The board of directors is Mr. Lau Junpeng, the executive chairman. Next is Mr. Nam Hyuk Cho, managing director, and lastly is Mr. Loh Wing Chi, the executive director. SENG Capital BERHAD established on 8th May 2006, and also it converted to public limited on 31st May 2006. It also listed on Bursa on 28th October 2008 and lastly in Bursa on 3rd August 2009. The achievements of the company is automated and computerized animal feeds production, awarded by Singapore AVA for egg exports, initiated distribution of animal health products, secure exclusive domestic distributorship from Bayer Animal Health.
Hi, my name is INSYIRAH binti Muhammad with number matric 2025198831.
Today, I will briefly present about the liquidity trend analysis of LEONG International BERHAD from 2020 to 2024. Let's start with the current ratio. Over 5-year period, the company showed a steady upward trend, which is from 1.07 in 2020 to 1.43 in 2004. This consistent increase indicates an improving ability to cover short-term liability using current asset. A ratio above 1.0 is generally considered healthy, so this upward trend is a positive sign of liquidity strength. Next is the quick ratio, which excludes inventory from current asset. It also improved year by year, reaching around 1.0 in 2024, showing that the company could meet its short-term obligation even without relying on stock. Lastly, looking at net working capital, which is current asset minus current liability, it rose significantly from RM154,627 in 2020 to RM935,970 ringgit in 2024. This growth highlights the company's strength, short-term financial positive, and operational efficiency. Now, let's move on to the activity and profitability ratio. Starting with the activity ratio, we observe the inventory turnover, ITO, and fixed asset turnover, FATO, from 2020 to 2024. ITO shows how efficiently the company turns inventory into sales, improved from 5.85 times in 2020 to a peak of 7.16 in 2023, before slightly dropping to 6.55 in 2024. This reflects strong inventory management overall. For FATO, which measures how well the company used its fixed asset to generate revenue, the ratio also increased gradually from 1.06 in 2020 to 1.46 in 2023, indicating better asset utilization. A small dip to 1.44 in 2024, but still shows consistency in performance. The gross profit margin GPM remains strong, consistently above 67%, although there was a slight decline in 2024. Operating profit margin OPM and net profit margin NPM both shows continuous improvement, with OPM increasing from 4.68% in 2020 to 9.57% in 2024, and NPM growing from 1.95% to 6.78%. This highlights improved cost control and higher profitability. Finally, return on equity and return on assets showed excellent growth. ROE rose from 5.23% to 18.96% and ROA from 4.97% to 13.82%, indicating stronger return for shareholder and efficient asset usage. In summary, the company has shown positive trend in both activity and profitability, reflecting stronger operation and financial performance over the 5-year period. Finally, we look at the debt ratio and debt to equity ratio, which measure the company's financial leverage and risk. Starting with the debt ratio, we can observe a decreasing trend over the year. It started at 60.52% in 2020 and dropped consistently to 48.37% in 2023. This indicates that the company has reduced its reliance on external debt to finance its assets, moving toward a healthier capital structure. Next, the debt to equity ratio shown on the right reflect how much debt is used relative to shareholder equity. It remains stable at around 0.39 to 0.45 between 2020 and 2023. However, there was a significant drop to 0.17 in 2024, which showing that the company has significantly reduced its debt and relying more on equity financing. Overall, both ratio indicate that LEONG International Berhad is managing its financial obligation more conservatively and reducing risk and strengthening its balance sheet over time. Thank you.
Hi, my name is Siti NORSHADILA binti MOHD with ID number 2025911805. I will continue with the ratio analysis of your SENG capital. The first one is the current ratio. As for the current ratio, in 2020, the current ratio is 1.13 times and decreased to 109 times in 2021. However, the ratio have increased from 2022 until 2024. It shows that the current ratio of your SENG capital Berhad has a higher ability to meet its short-term obligation in future. Number two is a quick ratio. In 2020, the quick ratio started with 0.86 times and then decreased to 0.83 times and then decreased to 0.82 times. But then the ratio going through the upward trends by 2022 until 2024 with 1.066 times and 2.02 times. This shows that higher ability to pay its short-term obligation without having rely on liquid current asset. So the third one is the net working capital. As for the net working capital, the ratio have going through a fluctuation from 2020 until 2022 and then a sharp upward trend over the 5-year period beginning in 2023 that represent that the firm current asset are financed with long-term financing after 2021. This one is activity ratio. So the first is inventory turnover ITO. As for the ITO, the Joseph Capital Berhad have gone through the fluctuate ratio over the 5-year period from 2020 until 2024. As you can see, it began with 6.88 times in 2020 and then decreased slightly in 2021 as at 6.62 times and then followed the increase in 2022 with 6.69 times and then suddenly they rose to the highest point in 2023 with 7.07 times and go through back the lowest ever treated over rate was recorded in 2034 with 5.68 times than its previous year. So the firm is moderately effectively using its inventory to generate sales except the lowest decline in 2034. The next one is TATO, which is total asset turnover. As for the total capital, the general upward showing from 2020 until 2023 begin with 0.81 times in 2020 and then 2021 with 0.85 times, 2022 with 1.05 times, 2023 with 1.08 times and then follow the decline in 2024 at 0.89 times. This shows the slightly fluctuate trend indicates that the firm is able to utilize its overall asset and moderately in managing its asset. The average collection period of your SENG capital. So sales capital have shown a downward trend through 2024 after a peak in 2021. It began at 2020 at 40 days and then slightly increased to 45 days and consistently decreased in 2022, 2023 and 2024, which is mean the firm is still good in managing its credit sale and also have a more cash in hand after a peak of 2021. Profitability ratio, the first one is gross profit margin, GPM. For the SENG capital Berhad in 2020, the GPM is 30.67% and then decreased in 2021 by 26.83% and then going through the upward trend by 2022 with 27.22%, 33.50%, 40.26% respectively for 2022 until 2024, which is this shows that the company have been able to control COGS, which is cost of goods sold, relative to its sale revenue. Next is OPM, operating profit margin. So in 2020, the OPM was 2.25% and then decreased in 2021 with 0.91% and then having the recovery ratio in 2022 with 4.50% and then continuously increased in 2023. The capital Berhad shows a significant upward trend that indicates that the firm is able to provide more return because the firm is productively managing its asset except in 2021. Profit margin. NPM. So in 2020, the NPM was 0.88% and then decreased to its lowest percentage in 2021 with 0.5%. In 2023, a sharp increase brought the NPM to 24.07% and the highest percentage was recorded at has a better growth prospect and is also able to provide the generate net earning to shareholder in earning more ringgit. ROE was 1.36% and then slightly decreased in 2021 to 0.68%. In 2022, the ROE was increased to 6.67% and increased in 2023 also with 32.66% and then slightly decreased in 2024 with 29.60%. The ROA was 1.82% and then this percentage decreased to its lowest percentage of 0.77%. In 2022, a recovery began with the ROE increase to 4.73% and then a sharp increase brought the ROA to 23.08% in 2023 and the highest percentage was recorded at 23.45% in 2024. The significant upward trend which indicates that the firm is able to control costs in its operation, asset are productive and provide more return. Leverage ratio. So the first one is the debt ratio. In 2020, the ratio began with 47.8% and then slightly increased in 2021 to 49.95%, and then continuously decreased in 2022, 2023, and 2024 to 45.05%, 32%, and 29.9% respectively. This shows a general downward trend after peaking in 2021, which means the firm is still good in managing its debt and has low financial risk. The last one is DER, debt equity ratio. In 2020, the ratio was at its highest point of 0.32 times and then continuously decreased in 2021, 2022, 2023, and 2024 to 0.28 times, 0.24 times, 0.17 times, and 0.11 times respectively.
Assalamualaikum. My name is NORSHADILA binti AZALI, and I would like to present about the comparative ratio analysis, which is LEONG International Berhad and SENG Capital Berhad. From the analysis of liquidity ratio, both of the company is the current ratio of LEONG International Berhad is 1.43 times in the years of 2024. Meanwhile, SENG Capital Berhad is 2.48 times, which is 1.03 times higher than LEONG International Berhad. The quick ratio shows that LEONG International Berhad is 0.99 times, then SENG Capital Berhad 2.02 times higher with 1.03 times than LEONG International Berhad. Next, the net working capital is 935,977 in LEONG International Berhad. Meanwhile, SENG Capital Berhad is 239,810,434. SENG Capital Berhad has more net working capital, and it shows the ability of a company to be more secure and stable. From the analysis of activity ratio, is inventory turnover of LEONG International Berhad is 6.55 times and SENG Capital Berhad is 5.98 times, which is LEONG International Berhad higher with 0.57 times than SENG Capital Berhad. Next, the average collection period of LEONG International Berhad is almost 25 days, while SENG Capital Berhad is almost 31 days. For total asset turnover of LEONG International Berhad is 1.44 times, then SENG Capital Berhad is 0.89 times with a difference of 0.55 times from both companies. From the analysis of profitability ratio, is the gross profit margin of LEONG International Berhad is 67.37%, while SENG Capital Berhad is 40.26% with a higher 27.11% in that comparison. The operating profit margin of LEONG International Berhad in 2024 is 9.57% and SYED Capital Berhad is 26.32%. For operating profit margin, the percent shows less is better performance in the company than more percent. Next, the net profit margin of LEONG International Berhad is 9.78%, while SYED Capital Berhad is 24.33%. The return on equity of LEONG International Berhad is 18.96%, while SYED Capital Berhad is 29.65%. Lastly, the return on asset of LEONG International Berhad is 13.82%, while SYED Capital Berhad is 23.45%. From the analysis of leverage ratio, is the debt ratio of LEONG International Berhad is 48.37% and SYED Capital Berhad is 26.91%. SYED Capital Berhad is lower than LEONG International Berhad in 21.46%. The debt equity ratio of LEONG International Berhad is 0.17 times and SYED Capital Berhad is 0.11 times. Both companies are less than 1. It indicates that more funds are provided by owners compared to creditors.